What's up, guys? It's Amma Jamma here, and we're going to go over one of the concepts I use for scalping the most often trading. Now, this is a concept that I like to use the most with mega caps and day trades. All right. And this is like liquidity sweeps, liquidity grabs, those scalps where you get these massive candles like this right here. And the reason I decided to record that video is it was occurring just as I was about to hit record to do a video on this, which is pretty damn funny. So we're going to go over this and we're going to talk about how you can anticipate these type of trades and how to play them with a really great risk reward so you can protect your assets and at the same time learn how to scalp with low minimal risk. All right, so we'll come back to this example. The first example we're going to use is yesterday's SPY, because this is one I talked through in the Discord, and I got the question if I could please go over it a little more in detail, which I absolutely can and will and did. So that's what we're going to do right now. And it's a pretty simple concept overall, and remember, this is a time sensitive type concept. So what it means is the following, all right? And we could see a clear example right here. Let me delete everything on this chart. And yesterday, as we had established this low a day right here, okay? And we're watching trades, you know, independent of everything else the market is doing, what other serious places that we have resistance support, so on and so forth. We have the following, all right? And this is what a lot of day traders tend to struggle with, is this right here. So we established this low on the chart. This is our low a day right here. If we put an arrow, we're going to put the arrow right here. This is our current low a day, all right? That's our low a day. So what happens is just below this low a day, and it actually happened 5 minutes before on this candle at 9:21 my time. And then this candle didn't clear the low a day. So technically this candle is still the low a day. Let me move my arrow over because technically it is still that candle. So what happens is the following, and this is a perfect example. We did not come down and clear it out here. But once we establish a low of day, what happens as time ticks on, we start to get orders stacked just below that low a day. And when I say just below that low a day, I'm talking the penny below the low a day, the dollar below the low a day, just below that low a day. And we get these stack of orders. It's a multi-level tier that happens here. We get people that took longs setting their stop loss just below entry. We get people that took shorts that ended up upside down in the position, cashing out to try to break even or get as much profits as possible. Simply said, once we get a bounce like this, the previous low a day starts to accumulate walls just below it, stacks of orders. All right? So what happens is the following, and this is the scalp we love to play in here. So over in this area here, and it's funny because most traders are going to say right here, I missed the best sell-off. I'm not going to take this sell-off. How much farther can we really go down? All these type of things. Where the reality of this trade is, unless you took this first candle at the loss of VWAP right here, this was a bad entry just above VWAP. Your risk reward doesn't make sense here. So really the only candle you can even make an argument for an entry is here. So you really didn't get all that much in those few candles, and then we pop up and we're coming down. So more than likely you haven't even made too much on puts at all. All right. So this is exactly what we want to see, and we got to see it happen. So in order to take this type of scalp, all right, we're looking for, first of all, our candle to dip below that previous low a day. And we got this right here. And what happens when we get this candle that dips below this previous low a day is it has cleared out all these orders that were sitting there just below the low a day. We have all sorts of buy limit, sell limit, all sorts of take profit, stop losses, getting stopped out, all that. It just stacks up. Plus the algo starts stacking up on top of it because the increased volume from the retail, from the humanity side of trading. So the algos start chirping at this level. So you get that double pronged high volume spike. And would you look at that, you can see how right here, all right, the volume on the candle starts to surge at the same time. Okay, you can see right here, this spiking volume candle right here was the clear out in orders. The candle before was 21K. This candle was 161. So we had 800% more volume on that next candle right there. So what happened? Boom. Step one, we cleared out all that order block. Step two, popping back up. We always, always, always need to pop back up above that. Okay, so we obviously did because of the way the candle performed. It opened here, it came down, it popped all the way up to this area here and closed above it. All right, so what happens is once you close above it, all right, the very next 1 minute candle, because now what happened, there's no walls. We've cleared it all out. There's no walls. There's nothing holding us up. That floor, the ceiling that's waiting to get broken, we just removed the support beam. All those stacked layers we had over here of people and algos all got cleared out. It all got chewed up here. And then immediately the next candle, the second we lose that previous low a day on the next candle, so right in this area right here, we take entry. All right? And now this is the important part. Once we clear out these orders, if we end up sitting in chop after we clear out a low for multiple minutes, I'm talking 5, 10, 20 minutes or more, this doesn't work because you're not going to get the same sweep because all those orders start to stack up again. It's giving it too much time. We want it immediate within a few minutes, I would say 10 minutes max, because what happens is it's like a liquidity grab. There's no orders there, meaning if we start to get sell pressure, which is exactly what happened, two things happen. One, there's no walls, so it pushes down hard. So it starts to push down hard. And then step two of that is the algos automatically fire. Okay? Algos are based off of price action. So we cleared out the lows. We have no walls. We take that entry. As we take that entry, there's no walls, there's nothing holding us. So it starts to it's like going fast. It's going a little quicker because there's no walls holding us up there. And then as soon as it starts to get a little bit quicker with no walls holding us up, the algorithmic buying and selling, which is 65% of the market and is never seen by human eyes, and it's based strictly on price action, their sirens go off and they flood into that same said short because all their criteria is met. And then boom, what do you get? You get this spiking downtrend with spiking high, insane high volume. I'm talking highest volume of the day. All right. And in that, what do we get? We get a 3-minute trade worth on a 0 DTE SPY. This was probably a 45 to 50% trade. Easy. In 3 minutes with a clear stop loss at the first candle to open and close back above that original pre-market or that original low. So you got a super tight stop loss. You know exactly what you're looking for. And then you get these things that stack on top of each other where you get like the faucet gets turned on high and it just comes streaming out, or a balloon pops, the floor breaks, whatever you might call it. And then you get that liquidity grab and you play it down. And now this one popped back up, of course, almost all of them do. But then we did establish lower highs at that point and we kept going on. And you can see, let's look here. Would you look at that? It happened again. Here was our new low a day, right here. All right. And we said we did chop for a few minutes, but when we finally got, that candle open below the previous low a day and the clear out, plus, we had a bearish right angle wedge here. Look at that. Ultimate bearish pattern. And it happened again right here. Once we had that candle open, after the clear out, right here, this candle, what did we get? We got the volatility surge. We got the spiking volume, the volatility surge, and this one had high spiking volume. We had a couple pop candles. That's fine. Even if you trimmed, you didn't hit break even on your finals, so you'd still be in the trade. And this one ended up coming down hard. Came down all the way to 577.63. This was right here, 100% trade. We were personally in this one yesterday. I was. You know, and then again and again and again, you could see it happening on this sell-off. And here it is again. All right. You could see it right here. When we finally get that candle open close below, which is right here, we start to get the flush. All right. Sorry. And then we get the spiking volume and the whoosh down. All right. So if we go to NVIDIA, this actually happened in real time as I was getting ready to start this video. Same exact thing. We got it right here. Okay. We can see it in real time. So we had, this is our previous low. And this one was probably a little tougher. You have to jump in the second you lose the candle that cleared out the imbalance. So this wick, the second we lost that wick, and I need to be clear about that. That's when you take entry. The second you lose the clear out candle, and that's why I'm one of those spies that a little choppy, because we didn't lose the clear out candle. So this one, again, this one was very quick. It only lasted 2 minutes. All right, but you take that entry the second you lose that low, which is right here, and then we get that, and this is on NVIDIA, not the SPY. We get the spiking volume and the sell, and we literally went from 139 to 130. We went over 1.5% in 90 seconds or so. This right here on a Thursday is going to pay you 35-40% easy, probably more. Let's check. So this was, entry candle was about a halfway into the 927 candle. Let's just check. I'm curious. So like $1.40 to $1.89, over 50%. Over 50%, 60 cents plus. So there you have it. That is how you play the liquidity grabs on mega cap stocks. And you'd be surprised if you go and back test this theory. It happens quite often. It needs to be extremely volatile and high volume stocks. Apple's a little tame. It's not going to work as much. Tesla, NVIDIA, SPY, Qs, IWM. Those are the 5 mainly I would use this for. You know, and there you have it. That's how you can scalp with risk reward better than swing trading. Because it truly is. Because unlike the SPY, if you expect at least like 40 cents, but your stop loss can be right up here, insane risk reward. You play this 2 or 3 times a day for 20-30%. You trade for what, 8 minutes total a day with the risk reward like your swing trading leaps. I mean, I don't know how to stack probabilities any better than that. That's all I got, guys. Thanks for listening, and bye.